Hi everyone, today we would like to introduce about the assets in two different accounting standard areas in the public sector, which is Malaysia Public Sector Accounting Standard and the International Public Sector Accounting Standard both. In the Malaysia Public Sector Accounting Standard, we would like to talk about the intangible assets. However, for the International Public Sector Accounting Standard both, we will talk about the property, plant and equipment and the lease.
The MPSAS is based on IPSAS, that is, MPSAS 1 is based on IPSAS 1. MPSAS applies to all public sector entities other than government business enterprise. GBE. GBEs apply Malaysia's Financial Reporting Standard and Private Entities Reporting Standard that issued by the Malaysian Accounting Standard Board, MASB. The objective of MPSAS, there are three, which is to provide guidance to the first-time adopter that prepares and presents financial statements following the adoptions of accrual-based MPSAS, and also to present high-quality information that provides transparent reporting about a first-time adopter's transitions to accrual-based MPSAS. And last is to provide a suitable starting point for accounting in accordance with accrual-based MPSAS, irrespective of the basis of accounting the first-time adopters has used prior to the date of adoptions and where the benefits are expected to exceed the costs. There are 38 accounting standards inside the Malaysian Public Sector Accounting Standards.
Now I would like to talk about what is intangible asset. An intangible asset is defined as an identifiable non-monetary asset without physical substance. Intangible asset also classified as either indefinite and definite assets. Intangibles are priceless, brand name, secret recipe, and result of green marketing strategy. For example, McDonald's, Coca-Cola, iPhone are all different forms of intangible. Next slide is talk about the example of intangible asset. Intangible can take various forms and most intangible assets form into one of the following groups. The first one is marketing-related intangible assets, which has trademarks and internet domain names. The second one is technology-related intangible assets, which have computer software and patents. The fourth one is contract-based intangible assets. We have licensing agreement and franchise agreement. Now we talk about characteristics of intangible asset. An intangible asset can be recognized as an asset if it meets the definition of an intangible asset, which is an identifiable non-monetary asset without physical substance. Intangible must have the following qualities, which have identifiability, control, and future economic benefit. The next slide is talk about the internally generated intangible asset. Goodwill is not an identifiable resource controlled by the entity, and its cost cannot be reliable measure. In the business combination, goodwill is the difference between the purchase price and fair value of the net asset of the entity acquired. The internally generated asset is classified into two phases. One is research recognized as intangible asset. The next is of development activities. Development phase must be guys. The example of development activities are the design, production, prototypes, and models, and the design, construction, and operation of a pilot plant that is not a scale economically feasible for commercial production. At the last page, intangible asset has separated into two models, which are cost model and variation model. Cost model is that the intangible is amortized systematically over the final useful life. For the variation model, intangible asset is shown at variable amount, which is fair value at the date of variation.
International Public Sector Accounting Standard Board, IPSASB, is formerly known as Public Sector Committee. It developed international public sector accounting standards, which used by the public sector entities and applied in when preparations of financial statements. It was supported by the International Federations of Accountants, IFAC. The objective of IPSASB is to enhance the quality and transparency of financial reporting by public sector entities, and also to promoting the adoptions and international convergence to IPSAS. IPSASB is also providing the comprehensive information for public sector financial management and decisions making. And last, it also provides the guidance and experience in the financial statement. In terms of IPSAS, is the IPSASB developed 31 accrual standard and cash basis standards, and also government reports on a cash basis do not account for significant liabilities. There are many government jurisdictions and international institutions has implementing this standard. The IPSAS includes total 40 accrual basis standard, and now we will more focus on explaining IPSAS 17, property, plants and equipment, and also IPSAS 13, lease.
What is PPE? Actually, PPE is a tangible asset, hereby used by company or business in the supply of goods or services, machinery used in manufacturing an item, or it should be here for rental to other, or it should be here for administrative purpose. Actually, PPE is a long-term asset which is not expected to be used for more than one accounting period. The example of PPE is land, building, plant, machinery, vehicle, computer equipment, and furniture. When do we need to recognize the PPE? The cost of PPE is recognized as an asset when the benefit associated with the PPE will go to the company. For example, if the machine you can use that to the company advantage to manufacturing the product, or building you can benefit by renting, so the benefit will go to the company. The cost of the item must be measured reliable. If the cost you cannot measure reliable, means that you cannot recognize the cost of PPE. The PPE should initially be recorded as its cost. What is the cost mean? The cost we need to be able to identify how to calculate the cost, include the cost of bridging the asset into work condition, include purchase price or import duty, site preparation or deliver cost, installation and assembly cost, testing cost, professional fees, and estimate dismantling or removal cost. We would not include any administrative and general overhead cost, cost of opening a new facility, cost of introducing a new product or service, cost of conduct business in a new location or with a new class of customer. So now we are talking about how we should track the subsequent expenditure on PPE. It depends on the nature of the subsequent expenditure. Any expenditure that maintain the condition of PPE, it should be tracked as expenses. Things that include repair, maintenance costs, or any services. And expenditure that improve the PPE are capitalized or added to the cost of PPE, which are the costs building an extension on a factory or upgrade to machinery that improve its performance beyond its original spec. The cost of PPE should be depreciated over its useful life and then shown in the account at its carrying value. The depreciation amount, how to get is PPE cost less its residual value. So for the useful life, it depends on how long, periods, and number of units. In the system basis, how or what manner. In the depreciation method, we have straight line basis, which is the depreciation charge is constant each period, or the second method is reducing balance, which is the depreciation charge is based on fixed percentage of the carrying value, the annual charge full each year. Actually, what we know about residual value. Residual value is the amount we expect to gain from the asset at the end of its useful life. It should be reviewed each year, and depreciation charge we calculate for any significant change. When the PPE is disposed of, sold, or scrapped, we compare the items carrying value at the date of dispose with disposed proceeds, how much we get. Means, is the disposal proceeds more than the carrying value, equals to profits on disposal. If the disposal proceeds is less than the carrying value, it means the loss on calculations of PPE, it should be 2 on disposal or either no future economic benefit expected. So for any gain or loss on the asset is calculated as normal, for example, disposal proceed less carrying amount, or gain or loss reported in comprehensive income statement, or any amount in the revaluation reserve relating to the asset is transferred to the retained earning. So any gain or loss include in profit and loss, but not as revenue. Not as revenue.
Lease is an agreement whereby the lessor conveys to the lessee in return for a payment or a series of payments with the right to use an asset for an agreed period of time. Lessor is the owner of an asset who loans out this asset to lessee against rental payment. Lessee is the person making use of the loan asset received from the lessor against rental payment. There are two types of lease, financial lease and operating lease. Financial lease is a lease that transfers substantially all the risks and rewards of ownership of an asset. Operating lease is a lease other than a financial lease. Some examples of risks are losses from idle capacity, technological obsolescence, changes in value due to changing economic conditions. Some examples of rewards are expectation of service potential or profitable operation over the asset's economic life, gain from appreciation in value, realization of a residual value. The minimum lease payments comprise the total payments by lessee plus payment required to exercise the lessee's bargain purchase option if it is reasonably certain that the lessee will exercise the option, any amounts guaranteed by the lessee or by a party related to the lessee, any residual value guaranteed to the lessor by the lessee, by a party related to the lessee or by an independent third party. The minimum lease payments are discounted to their present value. The implicit discount rate is the rate that, at the inception of the lease, causes the present value of the sum of the minimum lease payments plus the unguaranteed residual value to equal the fair value of the leased asset. Leases involving land and buildings. Operating lessee accounting, rental expenses is recognized on a straight-line basis in the economic outturn account over the lease term. Irrespective of the form or timing, the cost is recognized on a straight-line basis, such as free rent for a certain period at the beginning of the lease contract, cut off, accrued if service rendered but invoice not received at year-end, deferred if invoice received in advance of the service. Finance lessee accounting, value at inception, recognizes the asset and the lease obligation on balance sheet at the lower of the present value of the minimum lease payments and fair value of the asset. Finance lessee accounting, subsequent measurement, depreciate assets with finite lives over their useful life. If it is not reasonably certain that ownership will be transferred to the lessee at the end of the lease term, the asset should be depreciated over the shorter of the lease term or its useful life.